Good morning, it's Thursday the 25th of November. This is the Phoenix Blue update brought to you this morning by Tom Colley. Very quiet day yesterday as expected. US bank holiday, virtually no news out. In fact, we covered the only item of news, which was Euro News 9:30 on yesterday's late update. News today, all we've got is the second estimate gross domestic product quarter on the pound. There was some interesting news that I read overnight, however. This didn't make it to the financial press, but was across all the general press, and was about potential recounts in the US presidential election in key states. Money had been raised, and decisions need to be made for it to definitely happen, particularly in one key state, prior to today, or by the end of today, should I say. So I'm not sure what the true implications are of that. It doesn't yet seem to have had any dramatic effect on the markets, but there is potential for certain results to change, and there's sufficient potential to actually, in principle, change the winner of the election. Interestingly, Hillary Clinton isn't supporting these counts directly herself, so they may not be convinced that's the case. But just an interesting aside that I read last night. Okay, over to the markets. Well, as we said, very little happened yesterday. This is the dollar index. We've seen, ever since the election, we've seen this bullish run. We've had a pullback on the market today, quite clearly. We're at a key level. This is a monthly level. I've got a trend line through there. If that trend line breaks, then we see this level, which is the previous highs, 13, which were previously the highest point for 13 years. We see that being retested before further long side in this market. If that was to be broken, then obviously we're going to be looking at a more significant pullback. We'll be analysing the chart specifically over the weekend for that, and probably by Monday we'll have at least another level should that one be broken. But the way things are at the moment, the dollar's been so strong. We've still got the anticipated Fed rate rise to come in December, and looking forward into next year, and at the moment things seem quite rosy for the US economy, so that would be our more likely or our preferred area to expect price to pull back to. Over on the euro, well, came down to a key level of support from this March 15 low yesterday. At one point yesterday, that was a clear reversal off there. We've subsequently gone higher, and we're now retesting. If you can just see it, I've got an intraday channel through there. We're retesting that channel. But again, with it being so quiet today, we're going to let today wash out before looking for any other trades. Key zone in here is really the March 2000. Did I call that March there? I think that's November 2015. That's March 2015 here. When that low's broken, then in all honesty, parity seems to be the next significant stop, because there's very little support below that. So that's a very key level. We'll be looking, if we're getting when we get dollar strength back, to trade between those levels, but we may see a pullback back up to this sort of level based on that dollar pullback. Okay, over on the S&P, I showed you yesterday, or was it the day before, we had a nice little range which was visible on the 1 hour and the 4 hour. Yesterday it broke out of that range and retested, or is currently retesting the top of that range. I took a trade at that point. The stops are below the bottom of the range, and confidence is inspired by this trend line. It's a long-term trend line which was broken below, but now clearly broken above, and the bar for the day before yesterday is a nice low test stroke pin bar onto that trend line. So as you can see, my stop's below that, so I'm looking for the long side of the market there. The bias on equities for seasonal reasons and the Trump effect are all to the long side on this. If that trend line is broken, then that might change the picture and we might look at a more short-term pullback at that point. The other market that looked a little bit interesting overnight was gold. It had appeared to put in some sort of bottom around this sort of level, but overnight it's come down quite strongly to around 1170. There is a level through there. It looks like it's reversing off that level at the moment. In this instance, we've got a level here which we potentially be looking for a pullback to before to take this back to the short side, assuming that we remain with the risk-on scenario versus equities. If we see that S&P break to the downside, then we could possibly see a return up to 1250 before dollar strength comes back in and the equities markets turn back to the long side. The former of those more probable, we think. The latter, again, a more extreme scenario and would probably require something positive or negative to come out. Next week on Friday we have non-farm payroll, so anything that's outside the sort of range we've been talking about has been an acceptable level for the Fed rate rise to go ahead. I think it'd have to be pretty significant now for the rate rise not to go ahead, but that rate rise is potentially 100% or near enough written into the priced into the markets at the moment. So if we see that anything really negative on that, that could be perceived as risk that the rate rise won't happen, and then we could have a very dramatic move. Okay guys, today's a day really to be out of the markets. The bank holiday yesterday, it's a Friday, which is profit taking as normal. The markets are looking like they are going to take profits of this week's moves, so better to probably be sitting out the markets, managing any trades you've currently got open, with a view to doing our analysis at the weekend and starting the new week with a new focus and directional bias based on that. Just a reminder, don't forget we're on Instagram or Twitter. You can keep up with certain posts, also updates on specific trades which fall intraday between this video and the next day. You can also keep ahead of our forthcoming events on all those formats as well. If you have any questions whatsoever, please visit the website, go to the contacts page, or you can simply email us at info@phoenixblue.co.uk. Okay, have a great weekend, and we'll see you again on Monday. Goodbye.